Welcome to the latest episode of our Risk and Regulation News channel. My name is Stefan Röth. Today I'm here with my colleague Christoph Himmelmann, and we want to present to you the latest news on the EU's banking package and the EBA roadmap to deliver on the mandates for the EBA within the banking package.
Welcome also from my side. Yes, in the last couple of months we analyzed in detail the technical specifications of the CRR III drafts, and now, right before Christmas, we were provided with a lot of details on the EBA roadmap for 2024, and we are about to integrate them in our project plans together with our clients. And this is where we are at the moment, right in the beginning of the year, and we want to give you an overview today of the latest details of the EBA roadmap, including the data and reporting information.
Yes, it's early in 2024, so that means you will have 1 year time from now on to implement everything that the EU and the EBA have come up with. And this already, I think, is one of the important news. It's still January 2025, the envisaged date for the entry into force of the CRR III. And Christoph already mentioned it was the EU's Christmas present that we received late last year, a final CRR III draft that will most likely be put to the vote of the European Parliament early in the second quarter of this year, with the aim, as I said, to enter into force on the 1st of January 2025. And that of course means first reporting date will be end of March 2025, with the reports being due by mid of May next year. So the timeline now has become very, very compact for banks to implement all of this. And when I was talking to clients about these developments late last year, I was always providing two pieces of information. The first one was that there are roughly 140 mandates for the EBA to deliver that are contained in the banking package, and I was always quite curious how the EBA will manage to do so. And the second important news from my point of view has always been that the most important of these mandates would be the ITS on reporting, because any CRR III implementation project, of course, will need to have the information what is required within the reporting templates in the future to ensure that banks are ready to produce these reportings. And obviously somebody listened to me, because also at the end of last year the EBA published its roadmap for the implementation of these 140 mandates, and they also published a first consultation paper, a first draft, how the ITS on reporting and the ITS on disclosure would look like. And my question that I have always been posing, how will the EBA deliver on those 140 mandates within 1 year, was answered quite clearly: they won't. Instead, they have divided those 140 mandates into 5 different phases in which they will produce the documents, with the entry into force not necessarily by 2025, but in phase 4 stretching up to 4 years in the future after the entry into force of the CRR III itself. May sound strange at first sight, but of course this covers, for example, reports on the impact of CRR III that by necessity can only be produced after the CRR III has entered into force. However, and as I already said, the most important documents for any implementation project are the ITSs on reporting and disclosure. They will be finalized before the entry into force of the CRR III according to the EBA's plans in the first phase of this roadmap, and these are the 2 documents where we already have seen drafts that we will focus on now in the remainder of this channel.
Yes, so what we see here are the 2 consultation papers that we were provided with right before Christmas last year. And we have 1 implementing technical standard for the disclosure requirements and 1 amending technical standards for the reporting. The first and I think most important information here is that this is only the first step and not the complete picture of what we will see as a reporting framework in the CRR III world in 2025. So we will see here only those requirements that are related and directly related to the finalization of Basel III, so what we call the Basel IV package. So everything that was discussed from 2017 onwards, when Basel finalized the Basel III paper, is integrated here in those disclosure and reporting consultation papers. But everyone who has a deeper look into the CRR III and CRD VI package knows there is a lot more in it than just Basel III. We also have information, additional requirements on ESG. We have information and additional requirements on crypto assets. And I think another important part is the shadow banking reporting and disclosure requirements. Those elements are not yet covered here in those two consultation papers, but they will be covered in the next step. We expect it to start somewhere end of 2024. So we focus today on those requirements that are related to the Basel III paper, which is, of course, the most popular part is the output flow. We see a lot on credit risk standardized approach and IRB. We have a lot of information on the FRTB to report. There is a new set of approaches for the CVA risk capital charge, and there are other changes. So all the things that we were discussing in the last couple of months and even years are integrated here and are reflected in the disclosure and reporting templates as expected. To be very honest, we don't see many surprises, and this is also the first, I think, most important information when we look deeper into the consultation papers. It will be an additional workload for institutions to implement those reporting templates and disclosure templates. Why is this the case? Of course, it is a different information. Sometimes it's quite complex to gather all those information, and it will be more to report. If someone of you was hoping to see a reduction in reporting requirements, will be quite disappointed, I would say. There's one sentence in the preface of the EBA disclosure and reporting consultation paper which says something like, there's only a slight amendment of reporting and disclosure requirements. I would doubt. It's quite a lot to report. It's quite in addition. And there's this famous concept of proportionality inside the whole reporting and disclosure framework, but not yet here in those two consultation papers. It is expected to be reflected somewhere in the second step, that we see here also some relief for small and non-complex institutions, but this is not yet covered here in those reporting and disclosure consultation papers. So bottom line, banks have to be prepared to report more and to disclose more. What is as well quite important, EBA again fosters the integration and consistency of disclosure and reporting information. So what you can, as at the general guidance you can take with you, is everything that has to be disclosed should be somewhere available in your reporting information. So there should be a full alignment of those two worlds, not now, but in the future. As another, I think, main key takeaway for today is the overall concept of the reporting and disclosure framework, including the technology behind it, is not changing at all. So we are still talking about the EBA data point model. We are still talking about the XBRL format that is to be reported. We still talk about validation rules. So this whole very established concept is still in place and will not be changed with those two consultation papers. So all the discussions around integrated granular reporting like BIRD and IRF and the feasibility study performed by BaFin, all those things will be, will be discussed in parallel, but are not yet integrated somewhere here in those consultation papers. There is one element, one hint to those granular reporting, which we might see in the second step, but not yet here. And we can all be quite curious where this development ends, if we will see it during our career or if we are retired when we see the granular reporting. but still here for today, it's important to note the overall framework and technology remains unchanged. Another interesting part is we see in addition an updated mapping tool between disclosure and reporting information. So this reflects again the consistency and integration between these two worlds. And there's the so-called Pillar 3 Data Hub, which will be introduced in the upcoming month. The overall objective here is to have one single point of access for all disclosure information for all banks in the EU, so that investors, stakeholders, shareholders don't have to search and Google for disclosure reports anymore, but will find one centralized EBA Pillar 3 Data Hub for all information. This is consulted in a separate consultation paper, but still it needs to be seen as one set of information here, and we will be very curious to see how this development continues. So this is it as a starting point, what you need to consider up front. The consultation phase will last until mid of March this year, so whoever wants to give a feedback here should be quite quick. We are of course happy to support you here, because we already had a quite deep look into the technicalities here, and we want to provide you today with a few major parts of it. And Stefan, maybe you can jump to the next slide, and I will start at least with, I think, one of the most important part, of course, of the CRR III and Basel IV package, which is the output floor. And this is also, I think, one of the most important and interesting pieces that we see in the reporting and disclosure consultation papers. So the output floor, which is, of course, well known from a concept perspective, will be reflected in the reporting and disclosure templates as well. For the reporting templates, we will see a lot of amendments in the very beginning of the COREP templates, C2 and C3 and C4. You all know them. And you will see here the output floor input parameters. Some of you might know those unfloored total risk exposure amounts, UTRIA, or standardized total risk exposure amounts, STRIA. So those information will be reflected here, both before and after taking into account transitional provisions. And I think this is one of the most important information here. Banks, according to this consultation paper, will already have to report the output floor impact also under fully phased-in scenario. And with fully phased-in, we discussed this quite a lot in our projects. It is twofold. Fully phased-in is one part, like this 72.5 output floor factor, which will enter into force, I think, in 2030 for the first time in a phase-in period. And there is another set of transitional provisions, which even last longer until 2030 something. And here we see a second way of reporting the fully phased-in capital ratios, because here we have all those transitional provisions for the input parameters that will affect the output floor, like the transitional provisions for corporate exposures that are unrated and would receive 100% risk weight, but will receive 65% until 2033 if there's a certain PD level not exceeded. So this is, again, I think, one of the most important information. In this regard, we also see a separate template for IAB exposures subject to the output floor, is C10. And here we see, of course, a breakdown of the exposure classes and a lot of detailed information to be provided. Furthermore, there are updates on the securitization and SACCR templates that also reflect the output floor information accordingly. For the credit risk standardized approach, we see, as expected, a lot of amendments in the respective templates, as the standardized approach for credit risk is becoming more and more granular and risk sensitive also the reporting templates become more and more granular. So we see those breakdown of different exposure classes, especially increased granularity when it comes to items collateralized by mortgages on immovable property. So here we were discussing in our projects whether it is important for the RWA calculation, for example, to distinguish between ADC exposures and non-ADC exposures, between IPRE exposures and non-IPRE exposures. And here we have the answer. Yes, it is important. Maybe not for RWA calculation, but still for reporting, you need to be able to distinguish those information and report it accordingly. So here we expect very high impact in terms of like implementation effort and gathering all the data and information. Another example would be to collect all information for subordinated debt exposure. I think this was a very popular part of our pre-studies, where a couple of clients were wondering how to identify subordinated debt exposures for the SA exposure class, which was introduced with the CRR III. So this is at a glance, the most important information on the credit risk. I think we see on the next slide a couple of additional information also on the credit risk IRB part, but this is, I would say, also only like reflecting the changes in the IRB. There's not too much noise around the reporting requirements. Of course, we see new exposure classes introduced with the CRR III. They will need to be reported as expected. We see those exposure classes that are mandatorily switched to the SA. We see movements between FIRB and AIRB, so those elements are to be reflected in the reporting, of course, but nothing else, I would say. So this is, I think, moderate, medium impact for the implementation effort. Same for the IP losses, and I think for the immovable property, we are more discussing around the materiality of it. So when do we need to take which property value for the credit risk mitigation? But here for the IP losses reporting, it's quite moderate what we see in the reporting. On the next slide, we see some interesting news in the trading book and market risk environment. So you all know with the CRR III, the FRTB will enter into force in its full picture. So not only as a memorandum item somewhere in the reporting, but also for the RWA calculation and the capital ratios. And here we see in those consultation papers that we are discussing today, slight amendments. One is, I think, quite interesting on the trading book and banking book boundary. So this is, I think, a quite new concept. Until now, auditors, supervisors are quite interested in trading book and banking book boundary, and also in reclassification between these two books, but there's no reporting for it. So you always need to have an ad hoc reporting and other data gatherings to get information here. But here, with those consultation papers, it is introduced a new set of templates for the trading book and banking book composition and boundary. So here, I think it is very important to have a deeper look into it, because this is a very new animal, I would say, and not yet reflected, I would say, in the data warehouse of the institutions. Furthermore, for the market risk part, so the RWA calculation of market risk according to the FRTB framework, what we see in this consultation paper is quite moderate. But there is another reporting amendment that we saw last week, so very recently, which is already finalized. So there is a finalized amendment of the ITS on reporting for the FRTB reporting, already like finalized, not still in the consultation phase, published last week, and you need to see it as a combination. And if you see it as a combination, it is quite a big deal. So there is a comprehensive set of new reporting requirements for the FRTB approaches, be it the alternative standardized approach or the new internal model based approach. So both elements need to be reported in a very detailed manner, and we need to have a closer look into the reporting templates and instructions. Furthermore, on the next slide, we see, I think, next to the standardized approach for credit risk, one of the key change in the CRR III framework, which is the CVA risk capital charge. Here we see complete new standardized basic approaches, simplified approaches, and of course all those elements need to be reported accordingly, which means we see completely newly established reporting templates also for the CVA risk capital charge. And interestingly, we had a long debate on how the CVA risk capital charge will be introduced in the EU, because some of you might know it, the Basel standards require the CVA risk capital charge for all counterparty credit risk related items that are over the counter, so that are OTC. In the EU, we stick to the implementation that we saw already in the CRR I and CRR II, so we only need to calculate CVA risk capital charge for non-exempted exposures. And there's a long list of exempted exposures, which is related to, I think, the government part, which is related to the non-FS sector, which is related to intra-group exposures, and so on and so forth. So long list of exemptions, which in total reflects a huge discrepancy between the Basel standards and the CRR III. And to close this gap, at least partially, the EU introduces a reporting requirement for covering those exempted elements for the CVA risk capital charge, so that they at least have transparency on those exemptions and what that would mean if they would introduce also the CVA risk capital charge for those elements. So this is, I think, a quite interesting piece of work. We see other elements on the leverage ratio, other changes. We see few deletions on the IFRS transitional provisions, but I think this is, well, it's a low-hanging fruit. No one is still applying the IFRS transitional provisions on IFRS 9, but still, for the sake of completeness, those things will be deleted in this course. Quite interestingly, you haven't seen anything on operational risk here on these slides, but there is a complete new operational risk standardized approach. Why is this the case? So this consultation paper on disclosure and reporting is not yet covering the operational risk reporting, because there's still some outstanding details on the business indicator. EBA is planning to integrate the business indicator calculation with the FINREP templates. And so until there's no clarification on the business indicator components, there cannot be any integration with the FINREP templates, and hence there's no clarification, no technical standard on the operational risk reporting at the moment. We will expect this in the course of this year, but first of all, we need to see the details of the business indicator. So this is still outstanding both for reporting and disclosure. Well, this is it, I would say, for the reporting part, and curious to see what the disclosure will bring. But as I said, the integration is quite advanced, will be quite advanced, and you won't be too surprised, I believe, when Stefan presents you the disclosure details.
Indeed, and that is what I would wanted to say anyway, given that Christoph already explained that everything which is required to be disclosed can also be found in the reporting templates. Don't expect too many surprises here, and rather than taking you in a high level of detail through all of these topics that Christoph just explained, I want to quickly highlight 2 points. The first point, which I think quite interesting, is the key metrics template, which was designed to provide a quick overview of the most relevant regulatory key ratios. And well, with the introduction of the output floor, this key metrics template has been amended quite a bit, so it's losing the oversight part, but therefore offering quite a lot of additional information on the output floor and the transitional provisions around the output floor. For the remaining topics like credit risk standardized approach, but also IRB and market risk, as we said, there are changes that reflect mostly the 2017 Basel paper and the revised approaches for the calculation of capital requirements. There is, however, nothing that comes as a shock, I would say, for anybody who already had an intensive look on the reporting templates. And same goes also for the CVA and for the leverage ratio. What I think is much more interesting is the additional communication by the EBA on the Pillar 3 data hub. So the idea to collect all the Pillar 3 disclosures in one central database run by the EBA, and therefore make it much easier for anybody who is interested in reading disclosure reports to find them all in one space. And this is going to enter into force in 2025 as well, so with the advent of the CRR III. And what you can see here also in the process section is that the EBA plans to collect the Pillar 3 disclosure reports from large and other institutions, but plans to produce the disclosure templates for small and non-complex institutions based on the supervisory reporting, so that small and non-complex institutions will not have to produce disclosure reports by themselves any longer in the future under this Pillar 3 Data Hub model, which in the end, of course, shows that there is some element of proportionality at least incorporated already in these drafts, and as Christoph already said, more to follow. Well, that has been it. That was our overview of the EBA roadmap for the implementation of the CRR III. I think to summarize, this is a massive amount of work that institutions now will have very limited time to implement. And as I hope we were able to make clear, we already had a quite intensive and detailed look at the content of all of the consultation papers. And if you are interested in learning more about this, in finding out more about the details that have changed, we would very much invite you to get in touch with us, and we are happy to discuss with you in more detail the upcoming changes. Thank you very much.
Thank you.